Welcome to the 2024 Economic Preparation Channel. I'm your host, Tony. Thank you for joining me on this Sunday, June 9th, 2024 edition. Please be sure to subscribe to this channel for the latest interpretation of financial news and planning. We're not financial advisors, but we interpret financial news as we see fit from the news here. And as you can see today, ladies and gentlemen, U.S. adds much better than expected 272,000 jobs in May, but the unemployment rate edges up to 4%. Now, you remember a couple of videos ago, I told you that the unemployment rate will begin to rise this summer, and lo and behold, here it is. But the good news is, like I said, we've added about 25 to 30,000 jobs more than expected. Remember, we've been hovering around that 230,000, 240,000 jobs for months, at least according to the media. They've been telling us that this is how many jobs have been added in this economy. Now, remember, a lot of these jobs are part-time, seasonal jobs, second jobs for a lot of people in the industry. And this is what we're experiencing here. But in the good news, that is good news. The bad news is unemployment rate is continuing to rise to 4% and beyond. That is rising along with inflation, and that is the bad news right now. So, even though, real inflation is rising, not the inflation that they say the reports. You can see the 30-year Treasury, 10-year T-notes, 5-year Treasury, 2-notes, all up at this here. And many people are concerned that wages are not going to be able to keep pace with inflation. So far, wages have been keeping steady or a little bit slightly behind inflation, but that is subject to change depending on how high this thing rises. It's pretty clear now that the Federal Reserve Bank right now is considering hyperinflating the currency to help pay off this debt. Help pay down some of this debt, I should say, rather, and keep the dollar strong. And so that means printing money up. Obviously it's not in the form of stimulus checks anymore, but it's in the form of property economy up. The four big pillars of the economy: healthcare, defense spending, government spending, and leisure and hospitality or utilities. So they're going to prop that up. And job gains were concentrated in those areas, of course: healthcare, government, leisure, hospitality. And that's consistent with recent trends, according to reports, okay? So most of the jobs are on that. They account for more than half of the job gains, according to this report. And you notice how we're seeing less of these now hiring signs. They used to be just collecting applications. You know how you go to these places, you'll see a bus stop, you see a bus with a sign on it, now hiring bus drivers, or you see a PetSmart here, now hiring, or food service center, now hiring, or Amazon, or any of those companies now hiring. You're seeing less and less of those signs now hiring signs. It used to be they'll be collecting applications for a database, but now we're seeing less of those signs. So according to this article, they said that other significant growth areas came professional, scientific, and technical services. So we see that we are making progress. The bad news is that people are expecting this, or at least the economists are expecting this rate cut thing here coming. And just because that rate cuts are coming in the ECB in Europe here, as you can see in Germany, Frankfurt, Germany here, you can see that the ECB, European Central Bank, they're coming down. Interest rates are coming down in Europe, according to CNNBusinesses.com. This was on Thursday, but the Fed won't follow yet. So we're not going to be cutting rates anytime soon over here. Maybe in Europe they're going to be cutting rates, to lower some of the borrowing costs, according to Christine Lagarde, president of the ECB, at a press conference in Frankfurt, Germany. But in the United States and the Western world, they're not going to be lowering these rates, at least, like I said, once again, to November, December time frame. And even that is only going to be 25 basis points if we get a rate cut this year at all. So this is what the ECB is doing to continue to fight their price increases. Let me know what you think in your area. Are you going to think we're going to see a rate cut before November, December? Or do you think we're going to see a whole rate steady until the end of the next year, start lowering these rates? Or is it possible they could raise rates? A lot of people are not in that camp yet, according to all these odds of all these senior economists. But it's possible that they could raise rates in November, December, and start continuing the raising cycle after a pause when they see these real inflation numbers exceed. And not to mention that, but the debt clock continues to go. Listen, ladies and gentlemen, we're at $35 trillion of debt. And this is not including the money that we're sending over to Ukraine, over to Africa aid, over to Asia, you name it. We've got everything going on. Our hands are in the pot in every part of the world, as far as the United States spending and defense spending and all this other stuff going on, contracts. Listen, we have a lot of debt, and the debt's not necessarily the main problem. The problem is that we can't service the debt. We can't make payments on all these debts based on the tax revenue that we're being collecting. Taxes are going to go up, and that's another thing you're going to look at too. There's going to be all kind of fees from, it's on your bills. All the time they tell you to go paperless. So you sign up for paperless, then they charge you a paperless processing fee for going unpaperless. They charge you a processing fees and all kind of stuff. So look for that to go up on homeowners insurance, homeowner association, county, city, municipalities, townships, whatever you got going on. Those are going to be going up at the end of this year, as once the cities, counties, townships, municipalities realize that they're going to be a little bit short because of they're just not going to be bringing in the kind of money when these businesses are closing down. Most of these cities that you see, ladies and gentlemen, you see those cities, what are they building in your cities? Car washes, new gas stations, new storage facilities like U-Haul storage, or those extra space storage places, and or they're paving the roads, construction, doing like repaving of the roads, and people are driving cars that are older than 12 years old. New car sales are down, used car sales are down. So you tell me, where do you think we're going from here? And gas is expensive. I mean, how are we going to keep up gas prices? We haven't even gotten in the summer. Summer begins June 20th, 21st. And gas prices are already $3.85 a gallon for most people in the country for regular, and it's going to be headed to $4 a gallon once we get into July the 4th weekend, which is coming. And they're going to have all these reports about how, this is the busiest travel season of the world, and blah, 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 blah. Every year the media pitches that this is the most busiest weekend according to AAA for travel. But how's that going to affect it when gas prices are going to be $4 a gallon, guaranteed, $4.05, coming up this July the 4th holiday? And let me know, are you scaling back your travel? Are you getting an electric bike? Are you going on mass transit more if you have that available in your city or town? Let me know what you're going to be doing with that issue as well in the comments. I just don't see it happening. I don't see this thing. It's the Dow is hovering between 38 and 39,000 to 40,000. It's at a point where we might hit a ceiling, but I think the ceiling for the Dow will be 50K. Once the Dow hits 50,000, they pumped it up enough with all this stimulus, all this fake money and all this stuff going on, then that's when they're going to allow the slowdown and crash to happen, when the Dow gets to 50K here. So be prepared, stay prepared, continue to, not just physically prepare, mentally and spiritually prepare, but continue to think about how you're going to survive the long haul, because this is a marathon. This is not a sprint, where you're just going to have all your preps and, you're going to live happily ever after and just have all your securities and all that kind of stuff. It's not going to be one of those kind of collapses. Remember, this is a worldwide collapse. It's not just America, like the Great Depression was 1929. This is a worldwide thing. So this was going to require all of us to have a strategy of friends, neighbors, colleagues, cohorts, chums, whatever, to help us to mitigate these damages that are going to be here, because we are going to suffer damages here. And we are going to suffer things on the homeland that's going to be different than what we had in World War II and all of the things that we've had in the past with all these other things going on. This is a totally different type of battle that we're facing here in 2024, 2025. So stay prepared. God bless. Get some exercise, get some fresh air. Enjoy yourself, enjoy the moment. Don't get caught up in so much of news and the hype and the doomsday people out there that are saying that, everything is going down. Yes, it's true that we're in a slowdown. Yes, it's true that things are going to be happening, but there's still light in the tunnel. This world is not our home. We're just passing through. Hopefully we'll make a difference before, good Lord comes again and takes us back. So be blessed. Take care. I'll talk to you very soon.